Hey guys, my name is Alex and welcome to Road to Forex. Now, if you've been around the channel, you know that I do not take many trades. I just don't trust them on the whole. They have to go through a lot of filters in order for me to take them. And this week, I only trusted one, passed every filter that I had. And guess what? It paid off for me and my mentorees in a big, big way. So I'm gonna go over that trade, why I liked it, why I didn't hop into another trade that looked very similar, so that you can figure out how to filter out trades and capitalize on the really good ones for your own strategy. That is going to help you out massively. Now, before we jump into the video, please make sure to like, comment, subscribe, all that good stuff. And if you want a bit more information, some more in-depth videos, then join our Patreon. It is the place to be. The link is in the description. The price of a cup of coffee, you get access for a whole month. Okay, guys, let's jump into it now. What you can see here is that we are on the odd chef pairs on the 2 hours. Yes, I know this is a higher time frame, but what I'm going to talk about here is still applicable to 30 minutes, 15 minutes, 1 minute. Intraday trading, day trading, swing trading. The principle is going to be the same. Now, first thing that we are looking at here is a well-defined trend. That is what we have. We are focusing on this buy here. Clearly, the trend is very strong. Why is this so important? Well, it's to take down smart money. Well, it's not to take them down, I should say. I wish we could do that, but protect ourselves from smart money concepts. The banks. What do banks like to do? They like to fake out. They like to break out as well. If we go over here and we look at more or less of a range coming up and moving up and down through here, we can see multiple large wicks, multiple fake outs. If you're in that, you're looking for a bad time. You're looking to be hurt. How many of you that trade consolidation or ranges have been faked out more times than they could think? That they're going in and they're so sure, only for it to reverse. Well, we don't want that to happen with this trade. And a well-defined trend is the best medicine for smart money concepts. Why? Because if you look at it this way and you say, okay, people are probably buying in here, right? They're probably going to be buying at multiple points throughout this area. Yes, you could look over here and say, well, there's an FVG here, Alex, or there's a supply and demand zone here, Alex, and I would be going in for a sell. Shut up. I don't care. I don't care. The basic principle of the fact is that 90% of people that come into the markets have no idea what they're doing. They do not make money. The majority of retail traders who come in and start, which are thousands of people every single day, are going to look at a market that's forming higher highs and higher lows, and they're going to go for buys. There are going to be support traders in here, just like the support line that we've got here. And they're going to be using this support line as buys. As many reasons to sell in a trend, there are way more, at least twice as much to keep on going. Want to fight me about that? Go ahead, do it in the comments. Leave a comment, help my video, please. So, what we have here is a lot of people hopping in and buying, pushing the market up. So smart money wants to fake us out and they want to send the market down, right? If we get this arrow to work for me, they want to send the market down. They want to fake out. Maybe they want to break out through here, whatever it is. Well, what do they have to do? They're going to have to put in a lot of sell orders. That's what they have to do. They can't do anything else. To push the market down, they are going to have to stop the gradual increasing of the buys through here, here, and here. If they want to do it, first of all, they're going to have to get a big enough order in to counteract all the buy orders. The buyers are pushing the market up. So if you want the market just to go sideways, you need to equal that force that's coming up, right? Makes sense. And if you want to push that market going down, well, you don't even just have to equal it, you have to get on top of it. So you have to put a massive order in to send that market downwards. We don't need that. We don't want that. So the market continues to go up. I am in a good trend. I'm also using the EMA here to see what we are doing. What is going on? Are we staying on top of the EMA primarily? Yes, we are. And I'm also looking for a quick retracement. If it comes down, and I know this trend is strong, as it is, it's been going up, it's doing really well, I'm waiting for a retracement. I'm waiting for an optimal area that we've just pulled back in, aka the resistance line, for this specific trend line, paired with, guess what? Another support line. It's hitting double layers of support, and we then move above the EMA. Fantastic, great work. Now that, I haven't just given away my strategy. Obviously there are extra things on there, but that is what I'm looking at. And I love this trade. So when we hopped in, and this is what we do, and I'll tell everyone where I place my stop losses, that's absolutely fine. I always place my stop loss at the last low. That's my low there. And I'm going for a simple 1 to 2. Now that's all we took. We tried to go for a 1 to 3, hasn't given it to us yet. And then we also pulled out with our dual trade here at a 1 to 1. So all my mentorees are making roughly around 3% based on a 1% risk. Just off this trade. Fantastic, awesome. That's such a good move. So now let's look at a very similar move that I did not take and why I didn't like it. Unfortunately, guys, that is it for this video. If you want the full uncut version, it's on Patreon. For the price of a cup of coffee, you get the entire month's worth of access. And that stuff there, that's gonna turn you into a trader. Please make sure to like, comment, and subscribe, and I will see you in the next one. Bye.